I absolutely love and have a personal affinity for Fibonacci and any symbolic representation of it. But even with that being the case, I am absolutely not going to go into any depth explaining the mathematics and science behind the Fibonacci and golden ratio. If this ends up being something that you trade with, a little research into them certainly will not be time wasted, but you're not really going to get that here. So instead of anything in depth, what you're going to get is my basic explanation of what it is, and then I'm going to focus on how it can be used and how it can assist you in your trading journey. I do also have a full Fibonacci trading strategy course as well that is so fun to trade. So you can check that out if you desire, but I'm going to explain the basics here. Centuries ago, there was a mathematician by the name of Leonardo Fibonacci, for whom the Fibonacci sequencing was named after. And, you know, just as an aside, he didn't actually discover it, but he did introduce the Fibonacci sequence to the Western world. So therefore, in the way our world sometimes operates, it was actually named after him. In the Fibonacci sequence, it is simply that each number is the sum of the two preceding numbers, okay? But the sequence, the fact that, 1 and 1 is 2, 2 and 3 is 5, 5 and 8 is 13, etc. And it just keeps going. That is the Fibonacci sequence. But it's not the sequence that's so important. It is that as the numbers get larger, the quotient, and the quotient is just the result of dividing one quantity by another. The quotient between each successive pair of Fibonacci numbers approximates 1.618, or, its inverse of 0.618. That's the part that's important. This measurable proportion, which you will hear referred to a lot in fib trading, is usually called the 618. And so when people say 618, this is what they're talking about. But it's known by many names, the main one being like the golden ratio, the golden mean, the divine proportion, among others. It's got several names. So why is this number so important? Well, you see this number all over the place. It resonates through the very building blocks of nature, from the smallest atoms to the largest cosmic bodies that we see. It's seen over and over again in our mathematical and scientific observations, as well as being a central presence in our art world, as seen in the Mona Lisa. It's heavily found in the very architecture of historical places like the Great Pyramid in Giza, as well as the Parthenon in Athens. If you take a honeybee hive and you divide the female bees by the male bees, you'll get a number that's around 1.618. If you take a sunflower and you measure the spirals of the seeds, you'll have a 1.618 ratio between each spiral rotation. There are so many more examples, but that is not the lesson that I'm wanting to focus on here. What you need to know is that while the golden ratio permeates so much of our world, and that is all great and nice and all, but what does apply here is that the financial markets have the very same mathematical base as these examples that I just mentioned, which means that they can be applied to the market charts as possible confluence or as a strategy base in your trading. And that is what I'm going after. The Fibonacci sequencing and the golden ratio are used together in Forex trading as a forecasting tool, and its most popular use is creating interest levels or, price points actually in the market that price may react to in the future based on a price swing that has already happened. But what this ties into of the last lesson that we just went through, that we just watched in this course, is the fact that when used for forecasting, the price points are actually possible support and resistance levels. And so that is really, really cool when using the Fibonacci and golden ratio. And when we use the Fib levels and golden ratio in technical analysis, that ratio is typically translated into percentages. And so you'll either hear people or see them written as like 38.2, 50%, 61.8, but actually, you know, they are also the decimals, which, remember, we were looking at the quotient, the division, we look at the different ratios. And so they are decimals, but they're usually translated into the percentages. And in this graphic right here, you just see kind of the default levels. So most of the Fib tools that you'll come across, if there are default levels, these are give or take going to be kind of them. And I also have them listed here, you know, at the default level here, and as well as the percentages for as we're kind of going through it. And so you can just kind of glance at that, which I said typically is how they're referred to in Forex trading. And while it's really good to know what the actual Fib sequence levels are, you will find so many different levels that traders use. So I totally wouldn't stress over it. What is happening and how this works is that right here, we're going to pretend that this move in the market is the only one that has happened. That so far, you don't know any of this over to the right has happened. All you see is this first swing right here. And then as price pushes up, you see price starting to come back down. And so as price has had a lot of momentum going up, you're looking for that market correction and you see price starting to drop. And about this time you're going, okay, so I'm looking for at a market correction. And so you might draw your Fib in, meaning this was where it started because this was where the swing started. And this was the ending. This was where the market swing ended. And so you're wanting to measure levels off of this swing that already happened to see where potential support and resistance levels might be located based upon this Fibonacci levels, sequencing levels, as well as the golden ratio. Now, the golden zone, which is what my strategy is based off of, is this 618. It's the 618. It's the golden zone. And I look at it between the 50% and the 618. And many traders look at that and refer to it as the golden zone, meaning if price retraces in that, that is golden. More times than not, there's high probability, especially if you've got really good filters, that will take your trade just into jackpot. And in this exact little graphic here, we see price push up. You create your 1%, your 0%, your entire swing is measured, and then you're waiting to see what happens. And so we see price coming to retrace. It actually came down into the 50% zone, but for me, that wouldn't be a valid entry because that's not into the golden zone. Price pushes back up, and then what happens? It comes right down here and touches actually the 61.8 line, but I look for it to close, you know, somewhere to bounce somewhere between the 50 and the 618. So price basically came down into the golden zone right here and then had enough buying pressure to push up. And that's where I talk about that the financial markets, you do see, you know, where they are subject and have, you know, just these recurring instances of the Fib levels also in the financial market, because all of these other levels are Fib levels too. I mean, you see, you know, even as price is in this reversal right here, this correction right here, you would see that even here price reacted at the 23.6 and right past the 38.2 before it came down to the 61.8. And so you have potential levels of support and resistance being formed off the Fibonacci levels. Now, when I said earlier, I said, hey, you know, don't stress over these levels. You're going to hear them over and over. Anytime you hear somebody referring to trading by Fibs or Fib strategy or Fib settings, these are going to be some of the defaults, but Sometimes a currency pair will tend to retrace just above or just below a certain level. And through back testing and trading live markets, traders will discover these levels and will add or adjust their fib tool to reflect these levels in addition to, or sometimes in place of, the numbers that you see that I've put here that are kind of the default settings. You know, for example, like in my personal trading strategy and fib settings, I do use the 0, I do use the 23.6, I do use the 50, and I use the 618. And obviously, you know, I use the 100 because you always have the 0 and the 100 that measures the original swing that happened, that original market push. And so I do use those. However, I do not use the 38.2 at all. And I actually use 76.4 instead of the default of 78.6. And I also use a level right in here of the 88.2. And so no level is actually right or wrong. Only what is profitable or not profitable. So levels are good to know as a basis of energetic and mathematical pull, but be flexible with proven strategies as necessary in order for you to become consistently profitable. There are many different tools available that use the Fibonacci and golden ratio in order to forecast possible support and resistance areas for future price action. In every example that I have shown here in using the various fib tools, you will need 2 and sometimes 3 extreme points on the chart. If this swing in distance is chosen properly, intersections of the fib tool and the price action plot that happen in the future are said to mark important time and priced areas of interest and targets, support and resistance zones. So it can be a very powerful confluence to your trading. By far the most popular fib tool among Forex traders far and wide is going to be this first one right here, this fib retracement tool. And that is the tool that I use in my main fib golden zone strategy. And I want to give you a peek under the hood of that tool and just show you how I use it. But first, let's just touch on these couple of tools for a second. The fib retracement tools where price action pushes up. You can't see, but you know, because I know the graphic is really condensed, but price pushes up, comes back down to this golden zone, and then pushes up. Here you have the fib arc as well, where price comes in and retests this golden zone arc and moves out. You have the pitch fan, where it's the same thing, where it comes and creates levels of retest according to the fan and according to different levels of support and resistance. You have the fib channel that comes up here, and you have certain entry levels and certain channels that are drawn for you. You have this fib spiral, which is really fun and really cool to play with from your entry point, and that plots out, you know, not only entry but exit points. The fib wedge, which is awesome as well for entry and exit. The fib time zone. Now that one's one a lot of people trade as well. You'll find used in some of the markets, and it is focused on the amount of time of a movement as well. And so that one's pretty cool. And then the fib circles are kind of the same way, just drawing out support and resistance levels of entry and, measuring your exit points and if the trade is actually going in your direction or not. So like I said, there's a lot of tools, and these are just a few. There's a bunch more tools that are out there, some of them a little bit more obscure than others, but that are used all for forecasting support and resistance levels using Fibonacci sequencing and the golden ratio. I shared with you a few minutes ago that I use a few different fib levels than those which are commonly used in fib trading. And I find that those work best with my fib golden zone strategy. So do not feel that you need to copy my settings at all. You can absolutely go with the basic settings, the basic Fib settings are there for a reason, and you may find those levels more profitable. And if you do, then stick with those. But I wanted to share with you how I use them and what levels I use, just in case anybody was interested. But by all means, try out my levels as well as the default ones, as well as ones that other traders might use, as you know, and you may find that your levels are even different. Every single pair that you trade has its own personality, and certain pairs will absolutely respect zones differently. And so you may find just through your back testing and forward testing and live testing that you get a lot more profitable by shifting those levels around. So don't be afraid to do that. If you are in the course, these settings have a graphic download for you, as well as a dedicated page in the handbook. So don't worry about having to copy them off of, you know, this slide right here. If you're not in the course, you can just simply pause the video and get the settings that I use here. And in just a minute, we're going to pop over to the live chart. And so I'll show you where to find the Fib tool and show you how to select the tool to change the settings so that you can make your settings match these. And these two boxes right here are actually the Trading View, a screenshot of my Trading View Fibonacci Retracement Tool settings. And in Trading View, it's just one big long box. I just split it so it wasn't too compressed for this slide. And just the other note, you know, if you're trying to make your settings match mine, you do not have to have your levels in the same order of mine. Like I've got this stop loss, you know, which is this level right here, all the way down at the bottom. And I've got some levels skipped in here. And that's just over time. I use different ones. These are blank. You can put them all in one order, all in one line. It doesn't have to go in that order. The tool itself will arrange them appropriately. So just so that you know, they don't have to be in the same order. You don't have to skip or put them in the same slots as those, but those are the settings that I have and that I use on my tool for my strategy. I said at the beginning of this lesson that the Fib extension tool is mainly used as a forecasting tool, and it is. But I would like to submit the different ways that I have used this tool during live trading and found it very, very helpful. Now, I have used it for forecasting, not only forecasting levels of future, you know, possible support and resistance, but also for trend reversal zones. I have used it for managing my trade entries, as well as a solid way to invalidate a trade analysis and keep me out of losing trades, which I'm always looking to do. I have used the Fib retracement for preset take profit levels or take profit points or zones for scaling out when I'm in live trades, for taking profit off the table, which for me, that takes all emotion and guesswork out of the trade right from the start. The Fib tool, I don't know how clear it is on your slide, but it actually lists the prices here for you. And when I have that and I know that, hey, when the price point reaches this point right here, I'm scaling out, I'm taking profit, so that if price then reverses and goes against me, you know, I have profit secured. So I've used it for that for sure, and absolutely love it for that. I have used the tool to set price points to actually close out my trade at certain levels, especially if I was working on a pair and testing showed me that I wasn't as profitable going past a certain take profit point. I would just close the trade out, and so then I would exit and look for my next setup, which is not hard to find in Fib trading. Usually there's a lot of setups. It's just sifting through to get quality setups. I have also used the tool to set my stop loss, as well as letting it to guide me with a solid price point of closing partials when a trade is starting to not go my way, so that I end up losing less most of the time, which I am all about protecting my capital and staying profitable. And so this absolutely is an important zone for me. And just for a side note, while I'm covering the Fib Retracement Tool in this course, I also use the Fib Extension Tool for the exact same things on the trade management side when I'm not trading necessarily a Fib-based trading strategy. And I absolutely love that tool for those things as well. Hey, I am on the live chart of the Aussie yen, and so we are just going to hang out here for a minute and slap a few fibs on the chart so I can show you how that actually plays out, you know, in a live chart environment instead of on slides, which are always, you know, always work out the way the speaker is talking. And so in a non-controlled environment, even though we can already see kind of what's happening, let's just draw a few fibs and see how they go. Remember, you have to have 2 points to draw an actual fib, and you're picking up swings in the market. So if we're just looking at the screen, what do we see? Well, right now we see a high right here, we see a swing high, and we see a swing low. And if we take and mark out the golden zone, we see what happened. After that swing high and swing low, price retraced right up, came right past the golden zone, and then dropped down. And the way that I do my fibs, and again, if you are in the course and you have your handbook or you have your graphic, you can kind of pull that up and look at it. But I use my golden zones as my desired entry level. It's not always exact. Sometimes I'm, you know, sometimes I'm above it, sometimes I'm below it, but that's kind of my target. That's my golden entry zone. And so right here we see price just kind of came past it a little bit. And then what did price do? Price came right here. It hit take profit 1, and so this for right here, assuming my entry was say at the bottom here of the golden zone, you know, take profit 1, that's 129 pips over 21 hours, actually over 1 day and 6 hours. Sorry, I mismeasured that to start with. So over 1 day and 6 hours, that was 129 pips just on that one entry. And depending on where you got in, you might have gotten in here once price closed down out of the zone. You might have noticed price going, you know, here somewhere and said, no, I'm going to take that entry. You may have taken it on this retracement because price came back, fell back down, and did a retracement right here before dropping to take profit 1. And in this case, if you had pulled, you know, all of your, if you had closed your trade at take profit 1, you would have had 100% of your trade. If you had, remember, your stop loss is going to be back up here. And so a lot of times at take profit 1, I'll bring my stop loss to break even. If you had done that, you would have gotten stopped out when your price went back, but it was a break even trade because you hopefully already took, you know, at least 50% profit, or however you manage your trades here at take profit 1. I usually take a little bit more than that when I pull profit off for the first time, just because if price retraces back, I still want profit. So if you say took 60 or 70% off, you know, even if it retraced all the way and you didn't exit at some point in that, you still made, you know, some money on that. And so depending on where your stop loss was, if you hadn't pulled your stop loss, if it was still back here or back here somewhere, you know, then not only would you have hit, you know, take profit 1 there, you would have possibly also hit take profit 2 here, which then in that case, you know, just depending on where your entry was, let's say it's at the bottom of the 50%, you know, that would have been 250 pips over an 8-day trade that you would have let that run. Fibs also work when we just look at, again, let's just draw some swing highs and swing lows. We see a swing here, from here from this point to this point, if we draw our fib, what we see is our golden zone is here. And I don't trade this pair, by the way, the Aussie yen, so I have no idea actually if it respects on a consistent basis, if it retraces more. This is as much me looking at as you. This isn't one of my main trading pairs. So we see again that it kind of comes right past, but it tests this level, this 76.4, perfect. It tests this no problem and then retraces. And so depending on where your entry was, according to my fib, it hits take profit 1, then it comes down, it hits take profit 2, it comes down, it still keeps falling, and it hits take profit 3. It doesn't quite hit take profit 4, but it sure comes close before retracing again into the golden zone, which possibly, just depending on how you run your trades, could have given you a second entry in which you would have taken all 3 profit levels again if you had, you know, done a second entry just off that one fib run from, you know, this point here to this point here. You know, just a swing in the market, a price retracing and coming back. There were 2 possible, you know, entries with that. And let's kind of keep going and run another fib. We see a swing from, let me mark the points for you. So we're looking at a swing from here. It's a lower high in the market. We have a lower low in the market here. If we draw our fib from wick to wick here, we do have a golden zone here. Now this for me would have been iffy, like where it just barely crossed the 76.4, but again, this is the 3rd time we see a retracement on the Aussie yen almost to the 76.4. And so if I was trading this pair, it could just be what's happened over the last couple of months, or this could be a characteristic, a personality trait of this pair. But regardless, we see it traced right back to the 76.4. You could be taking your entries there and getting a little bit of an earlier entry. But again, just according to the way that I trade, you know, you would have your entry, just even say that your entry is down here at the 5 to 50%. You know, again, you hit take profit 1 when price, you know, say that your entry is right here, you know, right as price closes down or crosses below, you know, that 50% level. You had take profit 1 here, and it didn't quite make it to take profit 2 before price then retraced. So we can go in the opposite direction and just look at a swing we see here. So I see a swing in the market from here to here. And so let's draw a fib and see how it does. So here's the swing right here. You have a golden zone. And what happened? Price dropped back after that swing because you don't know what's happening. You know, when I draw this right here, I don't know what's happening. All I see, you know, is that, we can go one more candle back. All I see is that maybe price, you know, has a high here, and then on a lower time frame, even if I drop down, we'll drop down to the 15-minute, so I can see that, hey, here's a swing in the market. And if I see price starting to reverse, I can go, okay, so now I've drawn my fib. What's happening? I've already got my golden zone drawn out. I've already got my 100%, my 0%. This is my swing in the market. And so now I'm just watching for an entry. And so bam, price goes right down the golden zone. But what happened? It tapped this golden zone and rejected. And so again, where was your entry? It depends on what price, what time frame you're looking at. If I'm here on the 3-minute, you absolutely can watch price close right out of that golden zone, and you could have your entry here with your stop loss here, and you're looking at where is price going to go, you know, and ride that out on a low, you know, pulling your entry on a lower time frame. So what do we have going? Price is now exiting the golden zone. We had an early entry, so we could have entered again even past here. And we're watching what really happened on that 15-minute. And as price goes on, we're looking at it just took take profit 2. So here it hit take profit 1 right here. It hit take profit 2 right here. And to me, that's one of the beauties of the fib is I don't have to guess. It gives me right here on these fib levels, when you first draw it, it tells me at 93.343, that's my take profit 2. No emotion. I'm not looking at necessarily momentum. I'm not looking at anything else if I don't choose to, if I'm not actively managing it. I already know where my take profits are. I already know where I'm shutting down my trade. I already know trade management. I already know my trailing stop loss. You know, so the fib levels can be really, really powerful with that. And so we see just, you know, at swings in the market, and I'm closing this out and removing those drawings. And so we see just at different, you know, swings that we can draw the fib. We have a swing right here from low to high, and those were these 2 points right here, a low and a high in the market. Comes right down to the golden zone right here. Price taps the golden zone, it comes up, and what does it do? It immediately hits take profit 1, it hits take profit 2, it hits take profit 3, and if you did take profit 4, if you were letting your trade run, it also barely hit take profit 4 before price came back and retraced again for a second time into the golden zone. And so depending on your trading plan, that would have been another valid entry for you, in which case, had you entered there, you would have taken, you know, it would have hit take profit 1. Let me see if I can scroll in a little bit here for you. Take profit 1 and take profit 2 before price then retraced. And, you know, depending on how you draw your zones and different things, you would have taken another entry here. It didn't quite hit the zone, so I don't take it for almost, you know, when I have certain price points, but that was possibly, just depending on how you manage your trades, you know, 2 trades that were valid, and this one, you know, was a 67 pips, you know, on this lower time frame. This is where I forgot we're even on the 3-minute time frame, so 67 pips on a 3-minute time frame is actually great. So we'll pop back on the hour chart here. You know, again, just drawing different fibs in different places to see where price reacts. I mean, this is what just happened. If you look at this fib right here, you had again where price retraced right past the 76.4, and right now, live right now on this chart, price is closing beyond the 50%, and price will either close here and push lower, or, you know, price could also take and now move up. And so you always have a couple, you know, 2 options. Price can go bullish, it can go bearish, it can go either way. You don't always know, but you can have confluence. You can look for certain setups. You can look at different patterns. You can bring in a lot of filters of what would keep me out of a trade of entering right here just because the price retraced right here at the 76.4, and it's now, you know, exiting my 50% mark at the golden zone. I mean, this is live trade right here. So I genuinely don't know, you know, what is fixing to happen with this, but I do have things in my strategy that I am looking for. I'm looking for another 4 or 5 confluences to either keep me out of that trade or to all be heavy yeses of going into that trade. Regardless, like I said, just playing with fibs and just looking at, you know, drawing from swings in the market. Go back and play. Like I said, you can do some of the challenges, you know, in the course. Look where, just scroll back in the market and look how any pair that you're interested in, you know, look how they retrace. You know, right here we have a golden zone that's done from, you know, this peak here to this peak here. Those are my 2 peaks. That's what the drawing is, and price doesn't quite hit the golden zone there. Would that have been an entry for you? Would it have not been an entry for you? You know, what would you have looked at? I also, you know, look at how and have rules around what constitutes a valid fib zone for me and not, because if you then took from, you know, this particular point in the market, your golden zone is adjusted. If you took from this swing, you know, instead of this one up here, then it is in the golden zone. And so you have to kind of test your pair, you know, as well, and figure out how that pair responds to different golden zones, what's a valid entry for you and what's not. But it's really fun and cool to kind of get to know a pair, is just to come in and from every swing that you see, draw your fib and see, does price come up to your golden zone or does it not? And then if it doesn't, not a valid trade entry right here from here to here. And it's kind of hard to see, I know, when you're looking at, I'm going from this wick to the bottom of this wick, and we don't know any of this that has happened yet. We don't know anything, and so all we're doing is drawing from a swing we see in the market, and we're going, does price enter into the golden zone for an entry? And as soon as I draw this wick here, price absolutely shoots up right past the golden zone, almost to the 76.4 again, and then price absolutely drops and hits take profit 1, take profit 2, take profit 3, and take profit 4 if you were taking profit in that way. You know, we go to the next swing and just draw it at the next swing that I see. We have from here to here. Okay, well, price didn't quite come up there, so is there an adjusted swing? There sure is. There's a lower high right here. If we draw the swing here, it absolutely just barely kisses the golden zone right there and drops all the way through take profit 4. We have the next swing. You know, we have let me put this here for you. We have a high here. We have a new low here. And that, if that's all we know, and we draw a fib from this point to this point, and then we draw our golden zone, making sure y'all can see that, we draw our golden zone, what happens? This was our swing. Price absolutely came right back up and hit that golden zone right here before dropping, and you would have hit take profit 1, take profit 2, take profit 3, and take profit 4. And all we're doing is drawing fibs on the swings that we're seeing on this pair. And so let's sell the next swing. So we have a peak right here that happened, and we have a peak that happened right here, a swing in the market. And so again, we draw our fib from one point to another. Where is our golden zone? Our golden zone is right here. And what we have is price came back up, almost kissed the 76.4 as we're seeing tending to do with this pair, and price exits the golden zone and goes in our direction, and we hit take profit 1, we hit take profit 2 right here, we hit take profit 3 right here before price retraces and moves on off. So that was take profit 3, and just on that swing, just drawing on a swing, assuming we entered right here at the end of the 50%, that was 73 pips over, I didn't even look how long that was, 73 pips over 9 hours that you could have gotten just by, you know, drawing that swing if your setup, you know, agreed with that. We have a next swing we see here. We see a low here, and we see a high here. And if we just draw that swing here, low to high, and we draw our golden zone, we see here, after we draw that, you do have a hit here where this is our swing, right? And price comes down, and on this candle right here, it hits this golden zone, and it absolutely, if your entry was right there, if you were trading on a lower time frame and watching, this price would have come right up, and I mean, it hits right on the 23.6, which is my take profit 1. So you would have taken profit at 37.9, which is why that's my first level. I take profit right there at this 90.823 at take profit 1, because what happened? I hit take profit 1 and immediately price retraced and went in the opposite direction. So I still would have won a portion of that trade, even though the truth is that the trade didn't really go in my direction in that case. However, you know, the other side of that is if you're drawing this same swing, you know, I took this same low and this same high. If I took off this entry right here of the very first tap of the golden zone, not only is there a second tap in this golden zone, you know, that I then could have also taken an entry off of this candle, and assuming that I, you know, had the same exact thing, it doesn't go quite up there. So that one would have been a loss, or actually depending on where my stop loss was. If my stop loss was down here, the trade would have just been going and I didn't get stopped out yet. But if you pay attention to what's happening, let's say I didn't enter that, or I closed the trade down, or it's just running or whatever. What just happened? What you see is here's this golden zone. Price came down as it's doing with this pair, and it tested the 76.4. So this pair has deeper pullbacks than you see with some other pairs. And like I said, I just randomly clicked on this pair to show you fibs. I have never tested this pair. I've traded it probably a couple times, maybe a couple dozen times, where it had a certain setup for a certain strategy, but it's obviously pretty consistently pulling back to the 76.4, which is again a zone, that a level that works for me with some of the other pair. But anyway, it pulled back, and then, you know, price hit all the way up to take profit 4 with that. And so we're just looking at swings. You know, where's the next swing that we see? And you can draw these, you can look at these, you can play with this of where you're seeing highs and lows in the market. You know, you're saying, oh, okay, here's a swing right here, a high to a low. And if I draw it out, you know, did price come back to a golden zone? You know, it didn't before it kept dropping. Okay, no problem. You know, so we move on. It wasn't a valid trade. You know, we have the next swing, you know, that was right here, from, you know, a high to a low, and price came up. If you had entered right here, you would have lost. You know, this could have been just depending on your confluences. If you would have thought that that was an entry, it didn't quite hit take profit 1 that's here, so you would have lost that trade. You know, you're going to lose some, you're going to win some. You know, the other side of that is, okay, so now we see that price is reversing. So we start to look at swings in the market, you know, the opposite way. We see a swing right here. And what happened right here? Price came right here to the golden zone and reversed. You know, where do we see the next swing? We see another swing right here to right here. Price doesn't quite come back down to the golden zone. No entry. We see another swing right here, a high to low. What do we see? We see price coming right here to a golden zone. Entry. Now you got take profit 1 and take profit 2 before price goes into a reversal. Oh, okay, no problem. We see a reversal. If that fits our trading plan, we again can draw it in the opposite direction. You have the golden zone hit here until price hits take profit 1, 2, 3, and 4, falls in the opposite direction. You also have where you have this, now we're looking in the opposite direction. We have this swing from a high to a low. We see price coming back at the 76.4, and this might have been one I drew earlier, I don't remember. 76.4, almost, until it drops. And saying you would have entered here at the bottom of the golden zone, that was your trading plan, you would have only hit take profit here, you know, before price reversed, and you possibly could have taken another entry here and hit take profit 1 again, you know, just depending on your trade management style, how you're handling your stop losses. All of that comes in a fully fleshed out strategy. But again, I'm just trying to show you, like, hey, in playing with, you know, fibs, that you can just take the swings in the market, draw your fibs, and see where for a pair, where are the retracements, you know, and that fib is what it's doing, is projecting levels of possible support and resistance into the future. Each tool has some different personality traits about what you're looking for and what it's actually saying. But that, for the fib retracement tool, which by far, like I said, is the most popular tool, is just get in there, go to a place in the market and start drawing the swings, and look how price comes back into that golden zone, and then how it moves out, and see again if that's something that becomes either a core part of your trading strategy or a confluence, where when you're looking for an entry at an area, is it at a golden zone or a common retracement point of the pair that you're trading? So fibs are one of my favorite tools in trading. I have had so much fun over the years trading them, and it's one, like I said, that I absolutely teach and recommend, and a fully fleshed out strategy can absolutely make you a ton of money if you come in, you know, with solid trade management, solid risk to reward management, and you know that you are getting to know your pair and you're testing it out and you show up consistently. It can be a powerful ally for you going forward.